Membership traders, good evening. 8:30 p.m. Wednesday, 8th of April 2020. And I welcome new joinees to our community. We are in our evening session where in the first 10 to 15 minutes, we're going to take a look at the index, Nifty, Bank Nifty, and then the rest of the class will be followed. Me taking care of your doubts, the trades that you did, we'll discuss about them. So we have a Nifty which is definitely in a well-defined downtrend. Over here, I'm tonight using my RES Plus software with the necessary momentum and trend volatility indicators that we use in our strategies. A beautiful cascading downtrend. And recently we had a three-legged bounce back. I would call this 1, 2, 3. And it was a very good move yesterday. It seemed like, if you want me, I can change this to Japanese candlestick charts. Visual clarity. Now, if you remember, Friday was a very weak closing. Towards the end of Friday's trade, it was near the day's low. So if you go back to Friday, everything looked really weak and shorts would have been comfortable. Now, what happened on Tuesday after extended weekend, it covered all the losses of Friday, opened up, big gap, and then rallied further. It was almost a 10% move from the index. So it seemed like this was a trap. We did see a very good follow through in today's trade, but towards the end, we have a sell-off, which concluded today's bar as something like a spinning top. So how strong is this bounce back, and what are the possibilities that the index can post from here on? If I look at the last 2 days performance, it's essentially pharmaceutical stocks, auto, banks, mainly private sector banks, Bank Nifty, FMCG, thanks to Hindustan Unilever. Those who did not participate as much as the other sectors was the PSU banks, the real estate, and not much, the odd mid and small caps. So it is very clear that this bounce back is led by sectoral large caps. This is a healthy sign that large caps are bouncing out, helping the market to bounce back. But if I take you back to the chart of Nifty, there you go. We are in a well-defined downtrend, there's no doubt about it, and the index is trying to push itself further up, which takes us to a typical swing short kind of a setup. Not ready yet, definitely not ready. You can clearly see from these indicators. But few key points I would like to say is, this is a market where 5, 10, 8, 15% kind of moves up and down is very, very common. So the sheer volatility is something that you have to ride if you want to make money out of this market. Number two, how it's going to open tomorrow is a big uncertainty, because what we saw yesterday, it completely trapped all the bears and they stay trapped as of now. Now, coming back to this trap, if this is a trap, then definitely yesterday's low of 8360 is not coming. It should not come. If yesterday's low of 8360 is broken tomorrow or early next week, then this is not a strong trap. On the other hand, if it's not broken, there are chances that this is a trap and the market will push itself further up towards that 9,200 or further up on the upside. In our views, we have been very clear categorically that the first fall below 8K is a buying opportunity, and for us the worst case scenario comes from a fall below 7K, this, which we are talking about the Feb 2016 lows. Now the good thing is, as of now, the break of 8K had led to a bounce back, and the bounce back had seen a 1, 2, 3 kind of a complex move, which is clear that this break of 8K was a significant move. So I'm hopeful that the market will try to stay, will probably try to float and stay on the upside from here on. Short term bullish, medium to long term, I don't see any reason to be extremely bullish right now from a long term perspective. This is the monthly chart of Nifty in front of you. And I have these two important channels. The first channel is a long-term channel from the lows of the last bear market, 2008-9. And the other one, I'm looking at 2016, Feb 2016. 2016. This is an important low for me, sub 7K. And I sense that this is where the index should try to find itself good supports for meaningful bounce backs. Nevertheless, the index is now at the channel border of both these channels, essentially at supports. Break of that, 7K definitely on the cards. But as of now, from a short-term perspective, I would like to stay cautiously bullish until a typical well-defined swing short setup comes in. We would like to buy on a dip. Now, buying on a dip, look at the Nifty 15-minute chart. A well-defined uptrend in terms of our moving averages, kind of jumbled up here a little bit. But you'll find that after this fall today, it's trying to base out. And a move above 88.10, which will give you a breakout above this, can inch again up further close to that 9K mark up here. Bank Nifty, if you look at the Bank Nifty chart, the Bank Nifty has not managed to breach its 27th March 2020 high. This is Bank Nifty. This is Nifty. You see, this is 27 March. The high was broken today. But same is not the case with Bank Nifty. So Bank Nifty needs to do far better. The outperformance is Nifty is due to some other stocks coming from the pharmaceuticals and FMCG Hindustan Unilever. Banks need to play out well. PSU didn't play out as well as the private sectors did. So Bank Nifty is underperforming. That is not a good sign because it has the highest weightage overall in the market. It also did sell off significantly from the day's high, which you will clearly see in the 15-minute chart of Bank Nifty. A breakout above 88.10 for the Nifty will mean a breakout above 19,100, 150 for the Bank Nifty. So keep an eye from a short-term perspective tomorrow, 19,140, and a break about below today's low is 18,675. Clustered over here, either way it can give a move. My sense is it will try and bounce on the upside. Bank Nifty, the level that I'll be looking at, which corroborates with the Feb 2016 lows, is 13,400. So you can use 13,500, 13,000, which also corroborates beautifully with these erstwhile strong resistances seen in November 2010 and May, June 2013. Same view on the Bank Nifty, short-term cautiously bullish. The main reason is this trap. This should work as a trap, and this trap days low should not be broken. The shorts were trapped on this day. So it's not a very strong short squeeze because short squeeze do not sell off from the high of the bar, which we have seen today both in Bank Nifty and Nifty. So it's precarious situation which stays the kind of situation that we are financial, market-wise and otherwise is one of a kind. Trading-wise, I would request try and ride the volatility and keep your positions less, small, define well-defined stop losses, and try to stay light unless you've got some option positions and you know what is your payoff. From a short-term perspective, I'm a little bullish, cautiously bullish, but intermediate and long-term, no change in view as of now. Still very much bearish. Any bounce backs from here on can be looked upon as an opportunity to sell in those stocks which stay in a strong downtrend, unless, let's say, you're working with something like a Hindustan Unilever. Now, with a large cap like this, how did it manage to hit a life high in just matter of few days? Now, you need to understand this is not the kind of strong bear market that we are looking at, because in such a case, we don't see an index stock bouncing back, not only back to its life high, but significantly higher than its life high in just matter of few days. So this is a very different kind of a market. We've seen that coming in from pharmaceutical stocks, though pharmaceutical stocks were completely beaten down. They're underperformers, but they're trying to lift up. So it's a very different and difficult kind of a markets. I would request you to respect your stop losses, keep your positions light, stay cautiously bullish for tomorrow or maximum the first half of next week. But overall, the market might give you a chance on the downside again later. So that's my take on the Nifty and Bank Nifty. Mentorship traders, let's start discussing your trades and the doubts that you may have. So please start asking your questions.